Okay, here's our update on uranium. Hey, welcome to the Swing Trading with Cycles channel. This is where we time the market without predicting the market. We use trend analysis. We focus on price action. Data driven allows us to be consistent and reliable. So we're going to start with CCJ. This is your daily chart. You can see we sliced through the 10-period moving average, 10-day moving average in this case. This is a daily chart. And this is October 25th. It's a Tuesday night. That's important because Monday you start the weekly candle, right? And then that next day, Tuesday, you either get a continuation of the move, so follow through, you get a reversal of the move, or you get some kind of consolidation, something like an inside day. It doesn't have to be an inside day. It could be a slight higher high or a slight lower low that still serves as consolidation, but that's the point. And so if you take a look at where we think we are, or I should say where we are in the daily cycle. So really important. We had this gap here, these two lines, and you see this this says gap here. I'll remove it now because the gap has been closed. Where did the gap start, right? The gap happened here, October 23rd. October 24th, we gapped up and left behind a gap between October 24th and October 23rd, right? And we've been talking about this gap. That's why we drew this line here. I've been tweeting about it as well. I mentioned yesterday in my tweet that we're working our way up the gap, right? Though we are late in the daily cycle, and that's important. And just in general, we're kind of getting later in the rally, right? And so or I guess it depends on how you think about it. And so the gaps are usually pretty important, right? You can see this candle kind of sort of bounced off it. And I always talk about the fact that these things are zones, not levels. So it's not about exactly 2470 and exactly 2376. It's an area around it, right? So this thing bounced off it, then moved up, and then we cascaded lower. We didn't quite get down on this candle here on October 11th. We didn't quite get down that low. You thought you were safe, and then the next morning we just kind of plunged. Ever since that plunge, that next day we got consolidation. Then we got one final lower low. That was 15 days off of this low here. So this whole thing was 15 days. And then we've rallied for basically 7 days, right? So 15 minus 22. Because this is assuming that this is all one cycle, which is now looking more and more unlikely, right? It's looking like this is actually 1, 2, 3, 4, 5, 6, 7, potentially day 7. And of course, we'll know more in hindsight. And that's why I always say it's about the price action, less about the cycles. What we were focusing on was the gap and less about like the timing. But we've now closed the gap. I mean, again, another example, it's like not a coincidence. So this candle, the high was 2467, right? And this level is 2470. So it didn't stop there. It didn't stop right on a dime, right? It actually stopped 3 cents short. That's important, right? That would give you a potential target if you placed a trade that was short term. Now, and we'll talk about when we get to the weekly chart, a next sort of proximate target, especially if this is actually only day 7, which if you think about it, when you think about the S&P 500, and definitely take a look at the update on that, just broader markets, it looks like we're early in a daily cycle. We're on day 8 for the S&P 500, week 2. Now, that doesn't mean it has to be bullish. We could have a left-translated weekly cycle or even a left-translated daily cycle. But we have the potential for more upside. And I talk about this in my weekly report. We could even rally for another 7 weeks, even easily, right? And still get a left-translated weekly cycle. So you have to kind of pace yourself a little bit. But the fact that we basically close this gap here means you could expect maybe a little bit of chop for the next few days. Who knows? It could power right through, and obviously it could have a violent reversal. Any of those 3 things can happen, and you want to think about the scenarios and probabilities. I'm preparing myself for some chop here, especially if it chops right around the 2470, 2460 area. That tells you it's trying to charge up for a move higher. And if we look at the weekly chart, we can get a sort of a guesstimate at what that level higher is, right? So probably around the 27 area. That's your high from this big bearish candle the week of October 3rd. That's the candle that the gap is part of. I hope you're understanding that. That ginormous gap on the daily chart, what that ends up doing is creating a really long, ugly, red weekly candle, right? It just makes it harder for price to move higher. But we're doing that, right? Like we had this inside candle, right? Last week, inside week. And then this week, we've now made a new high above this candle. In the strat, this pattern is called a 3-1-2 reversal. Or actually, this is not a 3, this is a 2. Because this is just straight. So this is called a 2-1-2 reversal. But off a very long 2. And so your natural target is this candle here and probably a little bit higher. And if you think about it just from a price, just from a like higher highs, higher lows, we've got to make a high above here to start making higher highs on the weekly chart. That's what happens when you have a really big bearish candle. It makes it harder for you to make that higher high. But you could easily see a world where we're going to chop here for a little bit. We closed at 24.55. That gives you another $2.50 of upside to that $27 target. So another 10% easy. And we're probably going to pull back from this level. So could set up a nice entry. And so that's your weekly chart. And this is week 17. So you have to imagine. So that here's the thing, right? We could be setting up for that lower low. Maybe we just creep up to 27 and then we collapse. It is also possible that this big bearish candle was your ICO, right? That's not out of the question. And obviously a move above here we would need a move above here to confirm that, but you can anticipate that, take a lower time frame trade, and we'll get to that right before the end of this video. But I'll look at the monthly chart now. What this is going to create is, because think about that, right? We have 3 days left in this week, and then we have the 1 day next week. Those are your 4 days left to trade in October. And so if we continue on this path, right? So this candle opened at 27.26, right? So if we did get that move, and you could see that being, maybe that's the move we get, right? To above 27.26. So that would make this candle all of a sudden green, but we would still be inside the range of this candle. And so most likely November is going to open as an inside candle. It's really going to be a question of, does it open on the higher end of the range or the lower end of the range? And so if we think about the proximate trade here, we'll look at the hourly chart. So on the hourly, this is just an inside candle where we closed. We did have a pretty big pullback, right, on the previous like the hour before that. So the candle that closed at 3:30, that would be. And so that means we need to get above the high from this candle, like this little inside candle. So the same way we had that pattern on, again, I hope you're seeing this. It's called multiple time frame analysis. It all works the same on all the levels. It's just more important on the higher time frames. On that weekly level, you can see we're in the process of a 2-1-2 reversal. We'll see if it hits the target, right? So like where we have an inside candle is the 1, and we're now making a high above that inside candle. We would have to see something like that on the hourly chart where we need to make a high above 24.60, and then that tells us, okay, maybe we're making that move higher. And in terms of controlling risk, you could think about this kind of pivot area. If you want it to be really conservative, which can be dangerous, like you can not give the trade enough room, but you can see a move below 24.14-ish. And again, zones, not levels. You have to manage your risk in terms of how you set that stop. But that would be kind of your area, right? Like you can just kind of see these higher lows. And then because below that is like 23.21, right? So it's a question of, that's another like dollar drop. So that gives you a sense of where you might want to kind of assess risk. You could also see a level around here, around the 23.70s as well. But that's your way to, if you're thinking about it, you're talking about $2.50 of upside. So you can kind of measure, what you're willing to risk, right? Like, 25 cents, let's say, for that $2.50 upside. That's a pretty good risk reward. Obviously, you can, you'd have to kind of to each his own in terms of what you're comfortable with. And let's go through a few other uranium names really quickly. So UUU is looking nice. I will call out that this daily cycle, if you're thinking about the rally that we've been in, it's actually been 21 days. So we're getting a little bit late in that rally. But for this one, you could set your, like below the low of today, which was 688, right? If we get a pullback, right, that starts to give you a level where it could set up a nice risk reward. That's your daily chart. And on the weekly, how are we looking? Right, so the weekly just made a new high. So obviously very different picture than CCJ, right? You can see this is like clear air. We just made a new high, kind of above this little consolidation zone. So you'd really be expecting, wow. Yeah, I mean, this thing looks like it's headed to the $8 range, right? And that's your gateway back to these local highs around above 10. One step at a time. We have to take out this swing high next. But this is setting up a nice little level. And in terms of, I mean, your weekly low at 670, right? So what is that? That is 30, so that's 55 cents of downside for, almost $1 of upside. That's not a great risk reward. And so you'd want to kind of shrink down to smaller time frames to get a better sense of that. But definitely more bullish than CCJ if you're thinking about uranium names. If you really want to give this thing some room to breathe, maybe you set your stop around here and your target is more like around up there. Let's see, Denison. Oh, let's actually see what UUU, like Energy Fuels, looks like on the monthly. Yeah, so the monthly's looking nice. Again, big contrast to CCJ. Probably your biggest sort of blinking red light. In this case, let's say green light. Your monthly is green. CCJ was red. That's important to know about. So you'd want to be in Energy Fuels rather than CCJ. And really, it's that 821 level that would give us a new monthly high. And again, the same way we'd be getting out above that cluster of highs on the weekly, that would give us a nice move above these highs on the monthly. That's very nice. URA is just barely green. So again, slightly outperforming CCJ. And obviously, CCJ is a huge component, so it's actually pulling it down. So that obviously has some idiosyncratic things happening. I'm sure somebody can mention that in the comments, the fundamentals. I'm obviously focused specifically on the price action here. And this is your URNM looking a little bit more bullish, a little hammer forming here. It's held a low. And on this one, your high for the month is somewhere in the, call it, $80 range. That's interesting. We probably aren't going to get there by the end of this month. So you can see a world where we kind of try to complete the move in November. And again, the broader market is going to be a heavy influence on this one. Let's look at GoVix. That's red and kind of making new lows. That's not looking awesome. And again, these are all monthly charts. We're kind of focused on that here. Alaska also red on the month. Not looking awesome. Paladin, green on the month. That's nice. That's good to see. And it's just an inside month, though. So you want to watch this, right? It's like, it looks like it wants to make a run for that 70-cent area. And we're down here around 52. So that's actually a nice bit of upside. It's like almost 40%. Very clean move we could have there. Let's just look at what the weekly looks like. Weekly is also inside, and you can see this is a swing high on this weekly that started this downtrend. We got this little swing low here, and now this is holding. So once above 55 cents, call it 56 cents, that could signal your move closer to 70. So that's actually a really nice risk reward there, right? Like you can think about a trade where, a buy stop almost, right? If we can get above this 55, call it 55 and a half level, we could see a rather rapid move to 70, especially if all of uranium is coming out of a weekly cycle low. I'm just marking that. That's a nice, interesting, actionable trade. So that's a lay of the land of some of the uranium names. Does look like a bullish picture, near term. And I think for the CCJ example, I think it's a really good example of how price action analysis can give you very clear levels or zones. I guess I should say price clearly reacted to the gap, and it could have served as a nice sort of trading target. So now we'll see if we get consolidation, and I think that'll tell us a lot about the uranium space as a whole. Thanks for watching. See you next time.